In this video, you'll learn how payroll accountants determine Social Security and Medicare tax withholdings. The Social Security Act of 1935 mandated the withholding of certain taxes in addition to federal income tax. Two different taxes are part of the Social Security Act of 1935 legislation: Social Security tax and Medicare tax. These taxes are collectively known as FICA, Federal Insurance Contribution Act taxes, and both the employer and the employee contribute in equal parts to this tax. Social Security tax, formerly known as OASDI, was designed to cover people for illness, retirement, disability, and old age. In general, an eligible individual must work 10 years or have 40 credits to be able to draw on Social Security. The Social Security tax is paid by both employer and employee and is levied upon employees up to a maximum wage amount that increases each year. In 2023, the wage base is $160,200. This means that only the first $160,200 of wages earned are subject to the Social Security tax. Every dollar earned above $160,200 will not be subject to Social Security tax. In 2024, the wage base is $168,600, and it's estimated to increase to $174,900 in 2025. When I started my first job in California in 1989, the wage base was $48,000. There are currently discussions about implementing a special high-wage earner Social Security tax, but specifics have not been worked out yet. The Social Security tax rate is 6.2% on eligible wages. And remember that taxable wages can be different from gross pay because of pre-tax deductions and the wage base maximum. There's an exception, though. When an employee has multiple jobs in the same year, each employer withholds Social Security taxes. However, the employee's excess contribution is counted as federal income taxes, which means that you get a credit for it on your annual tax return as if you had paid federal income tax. The employer's contribution is not refunded, though. Let's take a look at how you would calculate the Social Security tax in the following example for 3 employees. Employee 1 has a period wage of $3,500 and has 47 prior pay periods for a total of $164,500. The maximum wage base for Social Security is $160,200, and therefore the employee's prior wages have already exceeded the max amount. Therefore, there is no additional Social Security tax withheld for the 48th payroll period. Let's look now at employee number 2, who is paid a biweekly wage of $68.50 and has earned $157,550 year to date. We compare the year to date amount of $157,550 to the maximum amount and determine that for the current payroll period, period 24, only $2,650 are subject to Social Security. What about the next employee? Employee number 3 is paid $7,800 in semi-monthly wages and has earned $156,000 year to date. That means that for the current payroll period, period 21, only $4,200 are subject to Social Security. Let's now look at the second part of FICA, which is Medicare tax. Medicare taxes provides basic health coverage for all individuals who generally have worked and paid Medicare taxes for 10 years or have a spouse who meets this requirement. There's no maximum wage base for Medicare taxes, and the tax rate is 1.45%. This tax, just like Social Security, is paid by employee and employer. In addition, the Affordable Care Act of 2010 levied an additional Medicare tax of 0.9% on certain workers who earn more than $200,000 single, $150K married and filing jointly, and $125K married and filing separately annually. This additional tax is only levied on employees. Employers do not pay this additional percentage. Our textbook is only using a threshold of $200,000 for simplicity. Please keep in mind that this is an additional tax on high wage earners, but there are no additional services that these individuals receive when they enroll in Medicare for the additional tax paid. That is different than Social Security because those individuals who pay in more get a higher Social Security benefit. Eligible Medicare wages are gross pay less pre-tax deductions such as Section 125 deductions for health insurance. Just a reminder that the 401k deduction is not allowed as a deduction in calculation of eligible wages for FICA taxes. Here are some examples for the calculation of Medicare taxes. Sam is a security guard for a local facility. He earned $1,355.50 during the most recent biweekly pay period and has earned $21,688 year to date. He's married, filing jointly, and claims two dependents under the age of 17 on his 2023 W-4. He has no pre-tax deductions. What is Sam's Medicare tax liability for the pay period? Well, first thing to remember is that the Form W-4 is for federal tax withholdings, and the dependents do not impact the Social Security and Medicare tax withholdings. So we can start with calculating the Medicare wages by first looking at the wages for the pay period and whether there are any pre-tax deductions. In this case, there are no pre-tax deductions. So the calculation in this case is $1,355.50 multiplied by 1.45%, which equals $19.65. In the second example, Ina is a single full-time exempt employee who earns $232,500 annually, paid monthly. Her year-to-date pay as of November 30th is $213,125. How much will be withheld from Ina for Medicare taxes for the December 31st pay date? This is an example where an employee is subject to the additional 0.9% Medicare tax withholding. So the first step is to calculate the regular Medicare tax withholding by first dividing the annual salary by 12, because Ina is paid monthly, and then multiplying the result of $19,375 by 1.45%, which is $280.94. We then multiply the $19,375 by 0.9% for a total of $174.38 for a grand total of Medicare tax withholdings of $455.32. Here for more example, let's start with the first one. Shoshana is a salaried exempt employee who earns an annual salary of $61,175, which is paid semi-monthly. She's married, filing separately, and claims two dependents under 17 per her 2023 Form W-4. What is her total FICA tax liability per pay period? When you see that the question asks for the FICA tax liability, that tells you that we need to calculate both the Social Security and the Medicare taxes. We need to also double check that the wages are below the maximum Social Security wage amount of $160,200, which Shoshana's wages are. So we'll start by dividing the annual salary by 61,175 by 24. There are no pre-tax deductions, and that's why we then multiply the result of $2,548.96 by 7.65% for a total of $195. Why 7.65%? Because Social Security is 6.2% and Medicare taxes is 1.45%. What about the next example? Paulo is a part-time security guard for a local facility. He earned $498.50 during the most recent weekly pay period and has earned $6,176 year to date. He's married, filing jointly. What is his Medicare tax liability for the pay period? To calculate the Medicare tax liability, we multiply the gross wages because there are no pre-tax deductions by 1.45% to arrive at $7.23. In the next example, Renee is a salaried exempt employee who earns an annual salary of $50,160, which is paid semi-monthly. She's married, filing separately, and claims dependents per her 2023 Form W-4. What is her total FICA tax liability per pay period? Just like we did in the first example, we divide the annual salary by 24 because Renee is paid semi-monthly, which results in $2,090. And then multiply the $2,090 by 7.65% to get the FICA tax of $159.89. The last example is the same except for the salary of $64,200. So we divide the salary by 24 for the semi-monthly wage of $2,675 and then multiply it by 7.65% for its FICA tax liability of $204.64.